Hello students, this is Professor Vicente Saga. Welcome to my class. This is part 4 of chapter 4 presentation. Chapter 4 risk assessment. This is where we left off. Let's take a look at some of the risk factors relating to opportunities. We said fraudulent financial reporting risk factors relating to opportunities includes the following: the nature of industry or entity's operation, complex or unstable organizational structure, deficit internal control, ineffective monitoring of management. So all of these factors could lead to opportunity to commit fraud. So as auditors, we need to watch out for some of these factors. So take a look at the first one: the nature of the industry or entity's operations. So if you have an operation whereby a lot of cash or handling of cash is involved, definitely the opportunity to commit a fraud is more severe in that environment versus an environment whereby all the receipt by the company comes via check, not only check, but all the receipt that result from providing services or selling goods actually goes directly into the bank account. So as auditors, we need to take a look at some of these risk factors in assessing opportunities to commit fraud. So let's take a look at some risk factors relating to attitude rationalization. So take a look at one of the factors here: committed to aggressive or unrealistic forecast. So if management has the habit of committing to aggressive or unrealistic forecast, then they put unnecessary pressure on themselves, and by so doing, they are more inclined to commit one fraudulent act or the other in order to make their numbers work. So moving along, let's take a look at the fraud risk assessment process. Here, this is very important. We did talk about errors, we talked about fraud. So here for fraud risk assessment process, I want you to know one thing from the outset. We have two types of fraud. Well, of course, we know that fraud involves intentional misstatements. Now, the two types of fraud are as follows. Number one, fraudulent financial reporting. That is a situation whereby a management or one of the employees intentionally stretch the rules or the accounting rules and stretch the numbers, and actually in order for them to look good by way of not complying with one particular accounting principles or the other. In other words, it's a fraud that you commit on paper. Now the other type is misappropriation of assets. That is a situation whereby an employee or management actually steal from the company for his own benefit. Take a laptop home and steal a laptop or any other valuable asset or cash of the company. So misappropriation of assets, you are actually stealing management or one of the employees is actually stealing the assets of the company, while fraudulent financial reporting deals with playing games on paper in terms of not complying with generally accepted accounting principles. Moving along, assessing the risk of material misstatement due to error or fraud. So we said before, fraudulent financial reporting includes acts such as the following: manipulation of numbers, misrepresentation, intentional omission, so on and so forth. So you can go through all of these yourself. Now, let's take a look at assessing the risk of material misstatement due to error or fraud. Okay, so we talked about misappropriation of assets involves theft, okay, of the company assets to the extent that the financial statements are misstated. Example includes stealing, paying for goods and services not received by the company, embezzling cash received. We talked about all of that. So let's take a look, moving along, still talking about assessing the risk of material misstatement due to error or fraud. We said that some risk factors relating to the misappropriation of assets, okay, incentives and pressures, opportunities to actually steal, the opportunity just present himself, and you have an employee that does not have an integrity, attitude or realization, we did talk about that. Somebody said, well, I decided to steal because my child is sick, or oh, well, they don't pay me well enough anyway, you know, so on and so forth. Now, let's take a look at the auditor's response to the risk assessment result. So the auditor assessed the risk of material misstatement at the financial statement and assertion levels. So on the financial statement level, the question is, do these risks relate to perversely to the financial statement? If the answer is yes, then the auditor will develop an overall response. If the answer is no, then we determine what might go wrong at the assertion level. Then we design an audit procedure for assertion level risk. Now, moving along, let's take a look at the auditor's response to the risk of assessment results. So to respond appropriately to financial statement level risk, the auditor might do some of the following. Emphasize to the audit team the need to be more vigilant, to maintain professional skepticism, to be mindful. We provide more supervision to the junior staff. We ask experienced staff to take on complex issues, so on and so forth. Evaluation of audit test results. So at the completion of the audit, the auditor should consider whether the total misstatements cause the financial statement to be materially misstated. In other words, all the misstatements from different areas are being taken into consideration and aggregated, and determine whether the total misstatement combined cause the financial statement to be materially misstated. If the financial statements are materially misstated, after the auditor evaluates the test result, then the auditor will approach management to make the necessary audit adjustment, okay? Or if the management makes those adjustments, case closed, all is well. If management does not make the needed adjustment, the auditor does not have a choice but to issue either qualified or adverse opinion. Still talking about evaluation of audit test result. If the auditor determines that the misstatement is or may be a result of fraud and has determined the effect could be material, then the auditor should attempt to obtain additional evidence to actually determine if this is the charge actually occurred, consider implication for other areas of the audit, discuss the matter for further investigation, talk to a management or suggest the appropriate level of management, consult with legal counsel. As a matter of fact, ultimately, depending on the seriousness of the fraud, the auditor might want to consider withdrawing from the audit. Now, documentation of auditor's risk assessment. Now, in addition to assessing the audit risk, the auditor is also responsible for documenting his assessment or evaluation of the audit risk, all right? So, you remember from the answer we said that one of the things that we do is we get all the audit team members together and talk about fraud, talk about the potential of fraud. We make inquiries of management and ask them whether fraud has happened or not. So we go about doing all those things. At the end of the day, you have to document everything that you do essentially during the process of assessing risk. If it is not documented, it is just as good as not doing it. Moving along, communications about fraud. When the auditor has found evidence that a fraud may exist, the matter should be brought to the attention of an appropriate level of management. So if a lower staff engaged in the fraud, you need to report it to the supervisor or the bigger boss. Now, if the fraud involves senior management and that could cause a material misstatement, then of course, the auditor should be, the financial statement, the information of the situation should be reported directly to the audit committee or the board of directors. And the auditor should also reach an understanding with the audit committee regarding the expected nature and extent of communications about misappropriations perpetrated by lower level employees. Now, the disclosure of fraud to parties other than the client senior management and its audit committee is not part of auditor's responsibility. In other words, as an auditor, when we uncover fraud, we cannot go to the police and report. We can't do that because of our confidentiality obligations, okay? However, there are some situations whereby the auditor does not have a choice but to report the fraud to a third party. An example would be to comply with certain legal and regulatory requirements. So the federal government or the government or the law requires you to report such an incident. You don't have no choice but to do so. Another example is in response to a subpoena. So if the auditor gets a subpoena, by the court, he doesn't have no choice but to comply as well. So that is the end of part 4 of chapter 4 presentation, and that is the conclusion of chapter 4 presentation altogether.